Greetings. This is Nigeria New Sustainability Economy NNSE Explainer Series on Wale Edun's fragile and tight balancing act fiscal trilemma of sequencing debt, tax, and investment management funding for amount of $3 trillion by 2050 to moderate hyperinflation, stabilize financial conditions, and boost sustainable growth. The high point of the recently concluded October 2023 World Bank International Monetary Fund annual meetings in Marrakech, Morocco, for Mr. Wale Edun, Nigeria's finance minister and coordinating economic minister, was his appointment to chair the African Governors Forum of the World Bank. These convivial, camaraderie, and affability gatherings of central banking and public finance honchos were in alignment with the overall sobriety of World Bank-IMF meeting discourse agenda, dominated by higher for longer interest rates, tight credit conditions and access, high inflation, cost of living crisis, geopolitical economic fragmentation, climate change, slow GDP growth rates. Nigeria's economic fundamentals are quite dire and mostly heading south. Inflation at 25.8%, GDP at 2.5%, Naira at 1,050 a dollar, foreign reserve at $33.2 billion, oil production at 1.4 million barrels per day. According to the World Bank, the country will need consistent funding of $3 trillion by 2050 in long-term debts, tax revenues, and equity corporate investment to subdue hyperinflation, stabilize financial conditions, and boost sustainable growth. President Bola Ahmed Tinubu is also projecting annual growth rate of 7% as against the current 3.5% for the gross domestic product to reach $1 million in 8 years from the current $395 billion. However, the IMF economic projection outlook in 2027 do not give credence to the president's optimism and the World Bank funding needs trajectory of $3 trillion by 2050. By 2027, according to IMF staff projection, GDP growth rate will be flat at 3%. Crude oil production at 1.58 million barrels a day. Budget oil price at $74.6 a barrel. Gross international reserves at $40.9 billion. External debt outstanding at $157.7 billion. By 2027, it is instructive to note the IMF projection of total expenditure at 53 trillion naira financed by total revenues of 29.3 trillion naira and domestic borrowing of 24 trillion naira will be inadequate to drive sustained, inclusive, and prosperous growth for Nigerians. According to the Debt Management Office, as of December 2020, Total external loans stood at $33.3 billion, made up of concessionary loan category of $20 billion and non-concessionary loan category loan of $13 billion, constituted majorly by Eurobond of $10.8 billion. This DMO fundraising framework does not have the herbs and fireworks to accelerate foreign exchange liquidity and foreign exchange reserve buffers for an orderly transition to upper income economy as envisioned by President Bola Ahmed Tinubu 7% annual growth rate projection, adding up to $1 trillion GDP output in 8 years, or by World Bank Nigeria needs projection of $3 trillion by 2050. The question is how to manage and bridge the huge physical gap of domestic resources in terms of availability, adequacy, and sustainability of public debts and tax revenues to drive sustained funding for macroeconomic stability and accelerated political economic growth. The key approach to addressing the structural funding gap is coherent and robust campaign for sustained capital inflows targeted at the over $410 trillion global finance and investment capital markets. The taxonomy for sustained market access will entail all economy structural reforms towards net zero decarbonization, just transition, corporate, environmental, social, and governance, and UN social development goals, and focus on mobilization and deployment of new capital inflows to upstream natural gas production and exports, recapitalization of banks and financial institutions, infrastructure, and real economic sectors. The new investors' alliances and partnerships, architecture, network, and groupings are emerging from the global northwestern hemisphere, bustling and bubbling with enormous dry powder capital firepower to fund innovative global decarbonized and sustainability consumer, industrial, and infrastructural supplies growth opportunities. The core hub investor groupings in the new global geopolitical economy landscape includes the International Partners Group, Oil and Gas Climate Initiative, One Planet Sovereign Wealth Funds, Central Bank Network for Greening the Financial System, Sustainable Blue Economy Finance Initiative, Climate Finance Leadership Initiative, the Glasgow Financial Alliance for Net Zero. Under the Just Energy Transition Partnership, blended funding, public and private market capital programs of the International Partnership Group consisting of the European Union, the United States, the United Kingdom, Canada, Japan, Norway, and Denmark, and the Glasgow Financial Alliance for Net Zero. $15 billion have been earmarked for Vietnam, $8.5 billion for South Africa, $20 billion for Indonesia, and Senegal is currently negotiating $2.7 billion with European Union. The solutions to curing high inflation, devaluation, unemployment, recession are in generating big bank capital inflows and fiscal surplus to repair balance sheets and foster investment-grade ratings of credit agencies and institutional investors. Nigeria's fiscal low-hanging fruit for taming inflation, engendering macroeconomic stability, and sustainable economic growth are, in sequence, just energy transition, direct equity investment capital inflows from international oil corporation, international energy funds, and Wall Street banks for funding production and exports of decarbonized crude oil, utilizing carbon capture and storage, and direct air capture technologies, natural gas, green hydrogen, ammonia, to reach 4 million barrels of oil equivalent per day by 2025. My name is Enitan Sanusi, Executive Secretary, Nigeria New Sustainability Economy NNSE. Thank you.